This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over let's press my buttons, right? Alright, I'm going to be going over the data, the SPY technical analysis, and very briefly going over treasuries slash the HYG for November 18th, 2025. And with that said, let's get started with the data. Now, for the data, there really isn't a whole lot to go over for tomorrow. We do have, let's see, federal budget. That doesn't matter too much. Export-import price index. That can move the market a little bit. So that's at 8:30 a.m. There's also industrial production. That can move the market slightly. That's at 9:15 a.m. So both of those come in the pre-market. Then at 10 a.m., there's the factory orders. The forecast is expecting a pretty major increase in those. Um, I'm not really leaning one way or another. Really expecting kind of cool data sets across the board. So I'm leaning a lot closer to the negative side on that, just because that has been printing a large negative for a while. So really, tomorrow is not a big day. As I mentioned in yesterday's video, it's really Wednesday. That is the big session because that's when we have the FOMC meeting minutes, we have the 20-year bond auction, we have the trade balance, which that's a big deal right now. We have the Atlanta Fed GDP. That's a really big deal. So really Wednesday is going to be when more of the impactful data is going to be hitting, and also the fact that we have Nvidia earnings in the afternoon. Um, so that's really what we're waiting for. Now, there is plenty to go over with the TA and everything, so we will quickly go over that, but just quickly going over my data notes again as um, I just want to continue keeping these points in everybody's head right now is that the market is really in a dangerous position. Okay, and throughout all my time trading, throughout all my time analyzing the market, I really haven't seen it basically be on this much of a hair trigger to where it's about to just fall off a waterfall. Um, I haven't seen it this bad. Uh, it's very concerning. Um, and we're going to talk about that. Probably actually just use this data portion to discuss how you can kind of hedge your portfolio and everything. But first, I want to just go through my list really quick. So again, with the government reopening, a lot of these data sets can be a little wonky in terms of what's actually coming out, what's not coming out, data sets coming out that potentially aren't listed. Um, all sorts of crazy stuff's going to be happening probably over the next 2 weeks. So just expect the unexpected when it comes to data sets being released. Now, for the most part, everything listed here should be released this week. Um, from my knowledge, they have been able to catch up and everything within the current listings should be correct. But that doesn't mean that we don't get some random data set thrown in there from October or something. So just be aware that the next 2 weeks can be very bumpy with data. We could be getting revisions or all sorts of different things out of really nowhere that can massively shift market perspective. So keep that in mind while you're trading the next 2 weeks. It's really going to be key. Now, Bitcoin, not going to make this a Bitcoin video, so I'm going to close off the data set really quick. I want to go to the charting, and I just want to very quickly go over Bitcoin in this section. Um, again, Bitcoin's really the one you need to be watching for the market momentum and current trend. Uh, it is probably the easiest um, liquid security out there. If hedge funds, if creditors, all sorts of different entities that don't really have to be in the open want to extract billions of dollars very quickly, they can do that, within minutes over Bitcoin. So keep that in mind. We are seeing a liquidation occurring, and this does very much so um, tie into the collateral crisis that is occurring right now. Um, Now, I do want to show my weekly levels just to keep everyone on board. Again, this is a kind of a messy chart, so I'm going to delete a little bit of this just to make this a little easier for everybody to see. Okay, so there was that large inverse cup that we just had, and let me go ahead and keep that back there. We discussed how this first red line right here where my cursor is a very, very major level of support. Now, if this level breaks through, and so far it looks like it's wanting to break through, then the next major level is really right at that 74,400. Okay, and there's really no way around that. That's what the next level is coming. So I will be lightly buying pretty much right after I finish doing this video. I'm actually probably going to buy a couple hundred or $1,000 worth of Bitcoin and wait on that. And if we do get our major dip down to that 74,000, then I will definitely commit a lot more funds to that. But we are hitting our first support level. This is the first range to um, very, very, very lightly start entering. Because if there is going to be a bounce, it will be at that range or it will be at that second support range. Okay. Um, so that's Bitcoin. We're seeing liquidations continuing right now. Um, it's very, very concerning. Okay. Going back to my list again. Okay, Bitcoin, talked about that. Major tech earnings. So we have Nvidia's earnings on Wednesday, and I think a lot of the market is having the assumption that Nvidia is going to kind of save the market this time. And I think that is not going to happen. I think that even if Nvidia had an extremely, extremely, extremely good earnings this time around, I think this collateral event is going to kind of supersede anything that Nvidia throws our way. Um, I can absolutely be wrong about that, so always be prepared. As I mentioned in yesterday's video, and I'm going to mention again today, hedge your positions. You should be in both calls and puts so that if we do have some massive bounce from, NVIDIA's earnings, that you will catch the upside and not just be blown out of all of your puts. Okay. So be aware of that. However, my personal opinion, I don't think NVIDIA's earnings are really going to help with the whole collateral issue right now. I think that very likely, NVIDIA will probably be seeing a good earning. They'll probably have a good guidance, but again, NVIDIA is not really associated with what's going on with the current market and with the current economy. Um, and I don't mean market, I mean with the economy. How a lot of the AI funds are really just shoved into basically a very, very, very small number of companies or entities, and basically it's all pushed into the very, very top, magnificent seven of the stock market. Um, so that's what I mean by that. So please don't misunderstand me. Obviously, Nvidia is a massive player. They are the big name. Um, but again, we are seeing a very serious collateral event going on. And if people have to sell positions, even though they may not want to sell NVIDIA, they might see NVIDIA's price tag double the current share price right now. But if they need the liquidity, if they need that collateral, um, they will have to press the sell button. So that's kind of what's being balanced right now is, are we going to have a full-blown essentially a market crash? That's really what's on the line here. Um, so just be aware of it. Now, Let's see. I think we covered all that. Wednesday's going to be the big day for data. So let's go ahead and get into the SPY technical analysis.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
Going over the SPY as always, let's go ahead and turn on our daily time frame with the moving averages and Bollinger Bands. Now, my daughter's knocking on the door. Friday we had a lower Bollinger rejection, and I discussed that in yesterday's video, how that would not be counted as the lower Bollinger day one. It would have to re-enter that range as of, November 17th, uh, November 17th trading session, today or yesterday, depending on when you're watching this. Uh, Today was really that first day of the lower Bollinger. And going through lower Bollinger mechanics, just like how the upper Bollinger mechanics work, you look for the day one to secure the level or below. For the upper Bollinger, it would be the level or above. And for day two, you are looking for a lower low into consolidation into the 5 mile. Now, the 5 mile moving average will be pulling down slowly each session, that we're pushed down below it. And it will slowly be consolidating to where the market price is. Either the market price will hold that level where the lower Bollinger is, or the market price is going to actively start slowly trading back up to the upper or to the 5 mile. And that's generally about a 3 to 4 day process. The first 2 days are the Bollinger move. The third and fourth day is usually the slow consolidation back up to retest the support. Okay. So essentially, what I'm really expecting from tomorrow is I'm expecting a lower low, and from that lower low, a pretty good buying opportunity, probably back up to the 668 range. Again, as the 5 mile will be pulling down, I believe I have it marked on your screen at the 672.20 range. It should be around that, give or take. So each day, we are below the 5 mile. The 5 mile will continue pulling downward. So just remember that. And with that pulling downward, that is our nearest upside level, as that is, the first moving average we will test. I know some people will look at that 50-day moving average and say that, potentially we're going to test that. I don't really look at the 50-day as a active range to test, but more so a long-term indicator for where the market trend is. So if you're above the 50-day moving average, then that means for 3 months you've been seeing buying above that level, which means it would be a continued push upward. If you're starting to pull below the 50-day moving average, then that means obviously you're starting to break away from the last 3 months of that buying range. So you're starting to finally see not just selling or not just consolidation, but actual selling into this range as well. Because we've been so far trading basically sideways, yeah, since uh November. So that makes a lot of sense. Now that we're entering the 50-day moving average, that is a bearish indicator. But again, none of our main supports are below it right now, so none of the moving averages are below that range. So even though it's a very, very major range to be aware of, it's not really solidifying the trend yet until we see the 5 mile below it, the 10 mile below it, the 20 mile below it, and really starting to see the upper Bollinger starting to pull towards that level, meaning quite a bit of selling. So from here, the next really leg down in the market is basically going to be at that next consolidation range, which is we broke that channel again. And we talked about that. We said if we broke the channel again, we'd be dragging it back to the previous support. So that means the buying channel has officially been broken. Okay, so we are going to make this selling channel bold so that it is a lot easier to see. And we are going to make previous buying channel not so present so that you could see better. All right, there we go. Okay, we are back within the consolidation channel. We have completed the inverse cup and handle, and I'll go ahead and very quickly draw that out. That is the worst inverse cup and handle, but you get the point. We are following this selling channel extremely well, and now that we know for a fact we're following the selling channel, actually delete that arrow. We don't need it anymore. And this arrow is holding true, meaning that the next real range we should be expecting, even though it seems pretty deep from this level, can be all the way down to the 651, basically the 652. Okay, because again, that is the lower range of that consolidation area. That is where our major buying supports are. We've seen it tested multiple times. Um, there is a range at the 654, and there's a range at the 657. Now, I'm not too concerned about those ranges. I believe that this type of selling should see the bottom of this consolidation channel. I'd be very, very surprised not to. Especially with the overnight, we're already at 663.85, a whole $2 below the closing price. So this selling is really starting to pick up quite a bit, and we're seeing that on the ADL as well. It's a little hard to see here, but the ADL is starting to dip down. Okay, that means that funds are starting to pull out of the SPY. Now, in the actual tech, we haven't really seen a lot of the selling occur. Um, we have a lot of weight that can really be shed. Okay. Now, granted, this will take some time, very likely, unless we're going to see this selling channel expand massively. But where I really think this collateral crisis is going to be taking us is at least back down to the 616 range. And that's another major consolidation channel. So if we do enter that range, um, if we don't build support at the 631, then obviously we should be expecting to trade all the way down to the 616.34, but that's still, quite a whiles away. So from this range, we are looking for a lower low. Um, Now the bottom of this consolidation channel is still a little bit away. Obviously, it's still a whole $11 away, but it is kind of the next major target to look for if we're not going to see buying basically up to the 5-day moving average again. So that's really the SPY technical analysis is day two, bottom Bollinger. You look for a lower low, and from that lower low, we should see some buying. Even though this buying is going to look bullish, it's very, very likely going to be bearish buying for liquidity, to retest the 5 MA and continue downward. Okay, and that's very likely how we will see this lower consolidation range broken unless we have a full-on market crash. So that's the SPY. I do want to quickly go over TLT and HIG, and just very briefly going over TLT. We did have a very, very slight bit of selling today, but it was starting to pick back up with the buying. Now, again, we are kind of at a very, very key range. We are near the bottom of this lower consolidation channel. So if we do start seeing selling below that range, then the fair expectation should be that this gap, this major chunk of liquidity right there, is going to be taken. Now, so far, I still have my doubts about that. It looks like we're building support, and with the whole collateral crisis really building up, I'm going to show you all Higgs chart in a moment here, but this is the exact situation that we get the massive, massive buys, and this is how, um, and let's go to the actual weekly chart. This is how we got the 155, 160 TLT price back in COVID. And that happened almost overnight. That was almost an overnight thing. And I'm not saying this is a COVID-esque event, but this is a major, major collateral event. Okay, this is a major collateral event that's going on right now. Um, it's very, very, very concerning. When we had our last collateral event here, we saw the price go from 82 all the way to, it was actually 99. It says 97, but that's because of the dividends. It was up to the 99. So actually did very, very good on that one. But this is the type of event that spikes TLT. So even though we might see a slight bit of selling within TLT, that's because again, people need collateral and they're having to sell treasuries to get that dollar collateral. Okay, and that's the only thing you have to think about in terms of the selling right now. It's not because of the interest rates, it's because people need dollars in their hand. Now, TLT is how you get to the flight to safety. Okay, TLT is really that flight to safety, and eventually the market is going to take that flight to safety. They will say that uh, the the repo yields, everything else is just not providing enough, and we're going to have to just lock into treasuries. It's coming. This is how those events happen. Let's go back to 2008. 2008, exact same thing, even though obviously the price differential was a lot different at the time. We saw a move all the way from the low 55 to the upper 75, and that was within a week's time. Okay, so again, this is the type of event where you get a massive, massive spike upward. This isn't the time to be really shaking out of your treasuries. This is exactly what you're kind of looking for the upside. Now, all of our bullish structure is still holding extremely well. We are seeing our moving averages retested. We saw the upper Bollinger hit again. Let me go back to the weekly chart. We had a push to the lower Bollinger from that upper Bollinger move. And from that lower Bollinger move, we had a lower Bollinger rejection. From this lower Bollinger rejection, we should be seeing the 5 mile retested. Um, I'm not going to go through the actual full price action today. I don't think that occurred today, but very likely that will occur over the next 2 sessions. And from that 5 mile test, we should be looking to the 20 mile. Now, we're kind of in a similar state with the SPY right now, where we see our market price pulling below the 50 mile, but just kind of like these previous dips, that doesn't last very long. And these previous dips were actually very interest and how do I say this? Very interest rate bearing news. It was the tariffs, it was inflation, all sorts of stuff was causing those dips during those time. We've broken a lot of that narrative, and now we're seeing an actual collateral crisis happen. And, you know, for me, this is pretty much exactly what you're looking for if you're looking for the TLT long position, is that you're looking for this type of collateral crisis because this is how you get the interest rates pulled down very, very, very quickly. Because somebody big is needing money, and that's exactly what these events are telling you. And we are going to look at the HIG, but I want to show you the dollar first, and this is the DXY. Go ahead and turn off the Bollingers and the moving averages. This is still following very well with the cup and handle formation that we had prior. So we should be looking for this to start pushing back up to the 100 range, and not just the 100 range, all the way back up to the 104. Um, that's going to put significant weight against the equity market, um, against all sorts of securities. This is going to cause major inflows into treasuries. This is going to cause further pain on Bitcoin. So be very, very cautious of that. Everybody should have DXY on their watch list and should be watching if this is continuing upward, because this continuing upward is telling you that people need dollars. That is 100% what it is telling you in this current process. So just be aware of that. Now the HIG again, and very, very quickly, uh, we've always mentioned if we see selling within the HIG, it is an extremely, extremely, extremely good indicator that we are very, very likely going to be selling or seeing selling within the equities. Now, so far, this is aligning perfectly. Um, and this is starting to get very, very sketchy. Okay. Um, this is starting to really want to break some ground here and start diving. So, um, I'm very excited about that because I have short positions in here. I've been literally loading up the shorts in the last few months. Ever since we hit that 81 and everything, I've just been loading up on HIG shorts. So this makes me very happy. To me, this looks like they want to knock out this 76 range. Um, yeah. So if we do have a collateral crisis, like I'm assuming we will, HIG should start free falling. We should continue seeing selling within the HIG because, again, you have to think about collateral events. What's going on during a collateral event? It's people needing to get dollars. And the reason why they're needing to get dollars is generally to finance and just ensure their current positions, because current creditors are tightening um, just the yields on everything and the maintenance fees and everything else. Especially with BlackRock having the major, that major credit explosion not even a month ago. Again, they had a pretty much a AAA loan, um, a loan holder go from 100 cents on the dollar loan to 0 cents on the dollar. That is really putting a massive grasp on the entire system, because now everybody is having to come up with far more collateral and far more money on hand before these people are willing to really loan them money. And we know that's occurring because the repos is now starting to be tapped. And if you're entering into the repo and you're even willing to engage the repo above the current Fed's upper limit, then that means that no one else is willing to finance you, and or they're willing to finance you at a higher rate. So that the high rate the Fed and the repo is offering actually isn't that high anymore. So we're kind of in dangerous waters when it comes to collateral. Uh, Assets like Bitcoin, gold, things that are very easily liquidated, we are seeing just be absolutely dumped right now. Um, Big is high yield corporate bonds, you know, so-called junk bonds. These are one of those assets that can somewhat be easily liquidated. So definitely be careful. Um, if we see massive selling within the HIG, it can definitely tell you that people need money and equities are really getting ready to start selling off. So that's the end of my spiel for tonight. This video is probably a whole 20-30 minutes longer than I anticipated, but I felt like I needed to ramble. Um, if you're wanting to ride the upside dollar momentum, you can use UUP. Uh, Yoop. We hate it, and by we it's me and me and Silver, but we hate it. Blah. Dollar bears. Or dollar bulls, I mean. They're the worst. Um, but if you want some of the upside exposure to the dollar and you want to join the crowd of being one of those just gross, yeah, then buy some oop positions. Other than that, our UVIX is looking good. Even though we've gotten absolutely hammered on this, we are down over six figures. Not happy. Haven't been able to work on recovering it because I've been so sick, so double not happy. But we will strive on. So yeah, let's see how everything goes. So far I'm seeing a lot of very, very good signals throughout treasuries. Um, the market looks like it really just wants to shed a ton of weight. And by a ton of weight, it could truly be trillions and trillions of dollars. So that's why I'm really bullish on TLT, because that means there's potentially hundreds of billions, if not trillions of dollars getting ready to enter treasuries. So, um, yeah, treasuries have been in a very large bear market for a long time. Um, this whole blue channel was that bear market from COVID all the way down until, um, you know, basically the end of 2025. Uh, so yeah, treasuries have been waiting to see buying for a long time, and now we're at that point. So yeah, anyway, I'm gonna stop rambling. I hope everyone has a great day tomorrow. Trade safe, and I will talk to you in my next video. Thank you all for supporting and watching and sharing and all the good stuff that you do. Thank you so, so much. Um, yeah, take care, everybody.